Welcome to Trading Lounge and the US indices for the 17th of May. And today I really just want to compare the Russell, the NASDAQ and the S&P in terms of their counts to the upside, because really they're all really going to top at this roughly the same time, so to speak. So we've got to kind of be a little bit philosophical and bring them all in together a little bit. Now it's quite obvious here that this sideways pattern here is a bullish correction, and it happened on the 10th or the 12th or the 15th of February. So I want to compare this particular top to the NASDAQ and also to the S&P, because this market here had been traveling sideways in this Elliott wave ABCDE triangle here, just traveling sideways, while the S&P was pretty much leading to the upside, and the NASDAQ had kind of been in between the middle of the Russell and the S&P. So in this case here, we've got wave 1 and 2 here, and I'm pretty clear that this is 1 and 2 and 3 and 4 and 5 here. So it's a really nice easy wave count to count. I mean, yes, I did have a bit of trouble with this in the initial stages, but once we allow things to corrections to mature, they tend to sort of fall in place, and it does appear that we have some type of triangle here. Maybe I've counted it wrong in this little leg here, and we've got this as a top and this is an A and a B and a C, but I'm still left with 3 waves here. So I think that all of them, in a nutshell, what I'm trying to say here is that we need to line them all up to finish at this wave 3 roughly the same time. So having them all sitting at this wave 4 here is not such a bad idea, I reckon, and we can pretty much look for this push up here for this. So this is in the early stages of February here. So when we look at, we can come back to this, but looking at the NASDAQ here, that's also roughly the same date, the 15th over here. So lining up this wave 3 here and this wave 3 here, while this has been going sideways and the NASDAQ's been doing something slightly differently. It's a different, the other Russell was a daily chart, this is a bit more of an intraday chart, but I'm thinking that we may have a bit of, we got this correction here for this. So yeah, wave 3 an A and a B and a C here for wave 4, because we've definitely got 1, 2, 3, 4, 5 here. If this was going to get any bigger and uglier, we'll just need to be a little bit mindful of this move down through here, coming back to the, just only moving up to the 61.8% here. But I really don't think that, I mean, yes, it will stall and dance around in this space a little bit because of the supply over here, but the S&P 500 is leading to the upside. And all the tech stocks, the Teslas and the Apples are sort of edging lower. So it's pulled this market, it hasn't allowed this market to run to the upside. But the S&P is trading above the 61.8%. So I think that we could look at this in this particular vein here and see it move up here in 5 waves, making a new high here for this. But the other thing here, I mean, if this is 5 waves here, well, then it will stop here and then it will have another move down. So we'll keep an eye on it. But like I mentioned, the S&P is traveling above it here. So I think the bias would be to continue to the upside. In our bullish weekly cycle, we look for Friday, well, tightening up on the Thursday being a bear day, and tightening up in the afternoon session, and then heading up for Thursday afternoon and Friday, and following through on the Monday. So let's see if we get that follow through on the Monday here. Okay, so this date around here, the 15, the second week in February here, when we compare that to the S&P 500, that's down here, the 16 here for this. So we can see that this has done something completely different, but this is really quite significant, having this intermediate third wave here, because if this is going to unfold here, it's certainly going to bring the others down with it, and they'll all move together on that note there. So in this case here, looking at it as 1 and 2 here, 1, 2, 3, 4, 5 for the third wave, and the fourth wave here, it's okay, this fourth wave in relationship to 1 and 2, it's okay, and then 1 and 2 and 3 and 4 here. And also 2, the reason I like this 4 is because of the larger pattern going across the 4,000 here. So a bit of a arrival and reaction here, and then the first high above the level, which is in 5 waves, and normally tops out around the 4-3 sort of area here as 1 and 2 and 3 and 4 and 5. So I think it's pretty safe. We do have long trades in here, but I think it's pretty safe to say, and we're above the 61.8% from that move down here. So I think it's pretty safe to say that we're going to continue to the upside here. So our best bet, it really is just to count 5 waves up to this point, and then we'll stop and reflect on what's going on, and we'll monitor it, and yeah, we may be able to get a short trade in here. A waves are normally quite sharp, so just be a bit mindful about that. So we'll count these 5 waves up here, and then we'll get out and we'll either look to short if we get a trade set up there. But this arrival and reaction, the first high above the level, then the ABC pattern, is the bullish pattern for this here. So the arrival, the classic trading levels pattern, if this is the 4 here, then the arrival reaction, the first high above the level. So we're tracking 5 waves up into this space, and then we'll have this correction. In this case, it will be bigger and probably pull down to the wave 4 of 1 lesser degree, and then head one more move to the upside. And I think most markets will be like that. Even the crypto markets will come into play like that as well. So yeah, so I think all we really need to do is really just drill in here for this to understand this move here. But in a nutshell, because the extension was in wave 3 here, then wave 1 here and wave 5 can be roughly the same length. Take that with a pinch of salt, but just that kind of look about it as such. So so from wave 4 here, we're looking for basically 1 and 2 and 3 and 4 and 5 coming up into this wave 3 up here. Now, I could be wrong about this and it could go further, okay? So we need to keep a bit of an open mind, but the main point is that once we've got our 1 and 2, and wave 3 normally occurs around the top here for that and pushes it back down for like wave 4 here. So that should be pretty obvious, that wave 4, and then we just need to track the 5 waves up to this point here. Now, it may just pull back 50-60% and move up again, but we'll be going along above the B wave here in this ABC correction. If it's going to go down into an A wave, then this will be wave 1 and 2 here and down for wave 3. So we'll be looking to short this ABC correction within here on the bottom of the B wave here, and we'll have to manage that risk, initial risk and exposure within that trade as well if we're going to be doing that. And trading against the trend is picking a top and then trading against the trend is not really a game for amateurs. So we're all amateurs, we're not perfect. So I think trading less in this area here would be, not to be too greedy and we need to gather evidence. We don't want to be believers as such, we need evidence. So that's what we'll be looking for on this slide. But coming back to understanding this here, we'll just drill into this a little bit further. So on the we've got a very clear wave 1 here and 2 here, and I think this is the third wave still opening up here, and we'll come into the third wave top here for this wave 3 and 4, and then up to wave 5. So pretty easy sailing, and as I mentioned, we are traveling above the 61.8% mark, which is not the end of the world or anything, but it just gives us that sort of reference point as here. So we're basically, if this was going to move down, then this block here of supply would have been where the most volume was turned over. So really that's where we should have failed, basically within this 50-60%, but we've burned through that. So I would imagine that, sure, it could top and turn at 78.6, the square root of 61.8%, but and it will have problems at 4 too, no doubt. There'll be a smaller little classic trading levels pattern in there, but all I'm saying is it's leading to the upside, it's leading all the others, and it's looking healthy in that regard. and perhaps tomorrow we can have a look at figure out the stocks that are leading this, pushing this to the upside as such, because the big tech stocks have been having their tickets clipped, so to speak. So institutionals are certainly taking profit on those, and probably as we've mentioned before, revolving back into a different type of sector. Let's just go to the tick chart on this. Sorry for rabbiting on too much. Okay, so yeah, last time we spoke, or over the last week rather, we were counting this down here as well as 1 and 2 and 3, but also as an A and a B and a C. And when I've seen this structure here, you can see how lazy it is compared to this one here, which was a bit sharper. That always tells me that we're in a wave C rather than a wave 3. So our bias was moving over to a wave C. All I've done differently is label that a blue wave 4 here. This top to this bottom here, the 61.8% was here. We moved through that. The second one from this top to this low was this one here, and as we can see, we're moving through that. And I just feel that we've got further to go in all of this. So I've got some sort of long trades on here. We can put this, I'll just copy this, not that one, but we'll copy that. And I'll just put that there, just at break even, cover costs at this stage. And we really need to be able to move through. If you put the stop, you can get the stop a bit closer, because when we're working with 4,200 here, we should be seeing group 1 above and group 2 below here. That should be the swing range of that. So you don't want to put the stop any closer than that. So we'll just keep it out of the way under the midpoint here. So it can be at 41.46 or 41.42. So down here a bit further. So we could move it up just a tad to that 41.42. Close enough there somewhere. Yeah, we want to survive these wave 4s here, because we want to get up to 4,300. That's our game, and there will be swings across the 4-2 there. So yeah, so that's it really. So we'll just hang tight, and our target is 4,300. So we'll pick up a handy few points in that space. Yeah. Alrighty, well, let's have a look at some stocks. Okay, starting with Amazon here, but just a precursor on this. We were looking on Friday, understanding that we were looking for a bit of a turn in the market, and on the late Thursday, and start running on the Friday, and that would follow through on the Monday, and the Tuesday you would start seeing profit taking, and then Wednesday and Thursday are our swing days. So some of these stocks, like Amazon, I mean, I could be wrong, but I mean, this 5 waves up here could be wave 1 and coming back for wave 2 and then heading higher at this point. But we're expecting them to, a lot of these stocks, just to have rallies up to certain points. So as yeah, so in some of them we're just looking to do short-term trades to the upside. So those trades can pretty much go through as long as the S&P and the NASDAQ are still rallying. But I'm thinking, you know, if we'd entered like Thursday afternoon and Friday or whatever, Friday morning and Friday afternoon, and then you can still build in on the Monday, and Tuesday we'll start seeing the profit taking happening in the beginning of the session, and then the trend should resume on lower volume and start to get weak at that point. That is a sign of weakness at that point. So just bear that in mind in these rallies. So keep a bit of a tighter game. So with Amazon here, we've been looking at wave 3 and 4 and 5 here. So we could be in for an A wave, a B wave, and a C wave down through here, or we could go straight up. But I'll have a look at that. I know we're going to rally for a little bit, but We'll look at this when we get a bit higher up here, and I'll have a look at the structures that we're in, and then we'll work out where we're going after that. But in a bit of a nutshell, I think we're on 20 ticks on this chart rather than 100 ticks. So one of the things we looked at, I'd counted 5 waves down from the top, obviously here. I'll just go back to the 100 ticks just to double check. Yeah, right. There is a possibility that we've got an A and a B and a C here for this. And then we noted that we had a little 5-wave structure here. It took a long time, and that low stayed in place. It took a long time for us to have a little A, B, and C here. And we noted that, and we're looking to head higher. So we went from the 100 ticks down to the 20 ticks. And we're looking for, we counted 5 waves up here, then we had this A, B, C pattern here that never took the low out here. So then we're looking for a bit of a move to the upside, so trading long here and so on. Yeah, and I think the thing here is that we've got these 5 waves here now. This would be 1 and 2 in here with a nice strong 3rd wave and a 4th and a 5th in here. So we're getting 5 waves in the opposite direction of the trend, so that means that we should get a pullback and then move further up here. So 1 and 2 would be pretty close there. So what I could just pointing out here is that let's just take that top there. There'll probably be another little push up there, but what I'm just looking for in the first instance is this here. So if you did enter the market here, then you can just all you can really do is just bring your stop up at that point. So if we just let's just put that in there somewhere. I'll just put that, I'll put that there, and we'll turn this one red just in case you're in this, and we'll just manage the stop on that. So, you know, if you've risked 1%, then we would have had the stop under here. Now we can I'll bring it up to this point. So that should about half that risk. So you should have about 0.5% in there. So this could probably, I mean, it could move up there in a different way, in different ways, but let's just assume for a moment that we get something like this here. It's better to assume the worst and prepare, you know, and then if we get lucky and it just keeps climbing, well then that's fine, you know, too, and we can count it that way as well. But we do need to understand the potential to come back to this point. So, Alphabet as well. Alphabet was a little bit tricky. This is 100 ticks here. So I was looking at wave 1 and 2 here, and I've counted 5 waves up here. And I know this is a little bit odd, but I'm putting it down as an expanded flat correction with an A wave, a B wave, and a C wave in here for wave 4, calling that low in at the 38.2% retracement level. And when you do that with an expanded flat, you take the top here and not here for that. So it's a bit just sort of holding the cat by the tail kind of thing. So I can see that we're getting a bit of an impulse wave here for this. You know, you may be long in this, you may be not, I can't remember what I said, but getting support on the 2,300. So it looks like we've got 1 and 2, a nice strong 3rd wave here, and we'll probably push up here and hit that roof at the 2-3 and then react from that point. So if I just draw this out here a little bit, we could end up with something like this here. We don't always get a nice pretty picture with an impulse wave and a corrective wave, but that would put this move here, we could bring that down and put it on top of that move, on top of wave B there, because if we get 5 here, we're going to get another 5. So that we'll be able to reduce our risk on that one, and of course the target will be the 2.5 at that point. Anyway, I'll leave that one with you. And Apple. So the bigger picture here really is that, well, the dominating picture really is from the top here. We've got 5 waves down here, so we're looking for an ABC pattern. It traded rather high, but basically hit that, because when markets mirror each other, so we get a trend down here, and then if it moves up here, then there's going to be wherever the largest volume was turned over in this wave 4 and this wave 2 here, that's going to reflect back over here. So that's why that's got that market memory sort of thing happening there. Well, it's, yeah. So, and coming down into this level down here, we're going to come back and we're going to have support here. So we were looking for a bit of a rally. I don't think this trend is finished just yet, but because of the S&P and the what's all going to push up from this point, then we have to be a little bit mindful of this. So I think we actually looked at being long here as well from memory. Yeah. So, and the reason for that is we've got wave 5 here, so we'd count it down to a low here, and we're looking at this as an impulse wave to the upside. Don't need 2 B waves there, but so yeah, so we thought, I mean, this was just really a trade if you're a little bit bored and a sort of a high risk thing. So we definitely got to take a percentage here, which really should have been at the 128. I don't know why I put that there for, but that should have been on the 128. So you may have closed out of this already, but in this case, let's just a good stop loss is a trading stop loss, because sometimes you're quite surprised how the market just kept on going and you wish you'd gotten out and you woulda, coulda, shoulda, and all those thoughts come into the game. But yeah, taking percentage on the Friday at that point and looking to take the rest at 130, or continue to use a trading stop. It doesn't really matter. I mean, this could be just about finished here, because we could look at wave B here. Putting this here, we could look at this as wave 1 here, and 2 here, and 3 here for this. It could be counted more bullish as well. This could be 1 and 2 again here as well, but I always like to start off with the most conservative count, and then this structure here would be 1 and 2 in here, and 1 and 2 and 3 and 4. So it'll be third. So there should still be a 4 and a 5 to come into this here for that, to finish that off there. But like I mentioned, it could be more bullish than that, but taking a conservative view, that's where that can be there. Let's just clean this up, we don't need that. See, I don't know if we'll get to the 130, that's why you need to do that there. And if this is going to be 1 and 2, and we're going to get this as a third wave here, so one of the things you could do is you could look at taking this low and the top here and look for the 38.2% retracement level and keep the stop under that. But I'd definitely take a chunk off the market there for sure. But we should see a bullish move, right up until Tuesday, and then a bit of profit taking, so you might get a bit more out of that. Let's just look at the next one. Square. So we're looking at this as an A wave, a B wave, and a C wave here. In the C wave, we should have 5 waves, so we can definitely look at that as 1 and 2. We could probably look at this as wave 3 here and 4 here, and then down for 5 here and finished here. Otherwise, we'll look for, we'll look for if that is the case, I'll look for an impulse wave off the low there, but I won't do that just yet. I know that we've got nice support, because we can see on the volume side here, on the volume, we've got this nice volume point, increased volume on this low here without the range extending, so we know that the buyers have come in there, or people covering their shorts, both. And then we see this move going up through here, but it's on less volume than the previous bar, so that's divergence. So it's not increasing volume as such, but there is a case for this low to be completed here based on 1 and 2 here and 3 here and 4 here and going down for 5 here. But I just wanted to gather a bit more information here first. I don't think we're going to miss too much. And when this occurs, then we'll be looking for a move up into new highs at that point. But I'm just wondering if we're going to get a wave 4 and then a wave 5 to come down, and then we cruise off from that point. So we'll go on to the intraday a little bit later for that. And Facebook, yeah, I think we looked at the weekly chart here before and just sort of throwing counts around. And I mean, one of the things here is that at the 300 here, which is a major trading level. So 100, 200, 300, and the next one would be at 500, then 800. So we're at 300 here, but this looks like a classic trading levels pattern as the arrival, the reaction in 3 waves and 5 waves up here. So looking for an ABC here is not such a big deal. Sure, that could be the top of a market here and we could just continue to fall down from there, but we just need to gather evidence. So I think we're looking at a pattern like this with the arrival, the reaction, the first high above the level, and ABC. So that's what I think, but I need to gather evidence for that. There is a variation on the classic trading levels pattern, which is this one here, where we don't come back below the level here. So we could go long above that high and we can bring it down to the second high. So we need to be aware of that as well. We don't want to be left standing in front of the car headlights, so to speak. So yes, technically we should be looking to go long above here for that. I'm just going to go straight to the tick chart, I think. We must have talked about being long here. Okay, so this is 100 ticks. I'm just going to go down to 20 ticks, and I did take a look at this here. I just put it on 10,000. So it does appear that, this, normally I don't normally include spikes as the top, but in this case I kind of have to, because here I've got a move up here and then back again, and then I've got 5 waves in this move. So this is an A and a B and a C wave here. So this is a corrective move here. So I have to look at this as 1 and 2 here. And then I was thinking that 1 and 2 and 3 and 4 and 5 the third wave, the fourth wave here to this point, and then this down here as all of the 5th wave down through here. So wave 3 here, and then an A wave, 3 waves for the B wave, and then up for the C wave for wave 4 and down for here. So in this case here, this is the 50-60% retracement level here. This is all a little bit dodgy here, but this is corrective here. So we knew the market was going up. So you may be long above this point. But this here now is 1 and 2, and this is a nice strong third wave. So the fourth wave will be tucked in here, and this will be the 5th wave here. So it will be interesting to see, that if we go past this, if I just draw this 5-wave structure here, if we go past this, so we leave it up to here. So we could count the 5 waves in here, but if we just go to the 320 here, which this is the 61.8% here, so if we get a classic trading levels pattern sitting on 320, then I'll know that this is not an A and a B and a C wave, and we'll have to look at it as 1 and 2 and 3 and 4 and so on. So we could look to go seriously long at a classic trading level pattern sitting on top of the 320 here, because it would be past the 3-wave structure, it would be past the 61.8%, and then we could look to go long from this point. I really need to draw this over here so I remember it, because anything over this side of the price on a tick chart just gets all squashed back up here when I close the charting program. Bit annoying, but so I'll just clean that up there, and we'll go back to 100 ticks, because that's kind of where we normally operate, but I had to pull that apart to have a bit of a look at it. So I think just trade up to here, look to take profit once that gap's closed, put it that way. But if we get, I have to draw it over here as well. If we do get something like this here, we will move back in at that point. But otherwise, I think it's prudent to either have a good trading stop loss or take profit at that point. So if we were Did I see a red one down here somewhere? Yeah, I did. It's a bit tricky because that's the wave 4 of 1 lesser degree, so you'd have to leave the stop there. I think taking some off the table, it's probably 1 and 2. This is probably all the 3rd and 4th. There's probably one more there somewhere, so I'll just put this percentage here. I think it's worth, if you're not going to take it all, then taking some percentage here and leaving this here, and then just waiting to see what happens. You could go that way about it, but I'll leave that up to you to decide. I mean, all these trades that were going, they were just, you know, popping up on the rally, so to speak. You know, Tesla here, we've got 2 counts for this. This could be a wave 2 or a wave 4. In both cases that I've got this, we'll be coming back to the 500. So we had that count, and we've got this count here as well. So there's no real difference in all of this. I still believe that we've got further to come down. So just on the, I mean, the reason I feel that we've got further to come down is because we should be taking the low of this out. We're close, but we're not there yet. But we at the same time, we should expect a bounce here, as I've sure I would have mentioned. So we're pretty close to that. I think we've still got further to go down with this. But once we get to this low here, then we need to get some evidence, you know, before we go long. I'd like to get some into this stock as well. We still need to wait for an impulse wave to the upside, or we need to set up on the 500 or something or other. We would need to see something like that. We need something to work with, you know, and then we can look to go long here, just in case the whole thing falls out of bed. You know, there'll be a lot of big short traders that will be happy to see this going down, but I think they'll get trapped here. But we'll look at the long side of that when we get there. Just on the tick charts here, let me just bring a bit more data in. Okay, a bit messy, but kind of on track. So we can put that wave C there and that wave 4 there, and just double checking myself. So we've got blue wave 1 here and blue wave 2. That's from the top where this B wave is. Blue wave 1 and 2, and then we're going down for blue wave 3 here, and then 4 and then 5 to make wave C. Wave 5 won't be long because the extension's in wave 3. So from 2 to 3 here, we're looking for 5 waves. So we counted down here as 1, 2, 3, 4, 5 for 1 and 2, and then we were working. We may even have a short position above here. I can't remember if we got stopped out or what we did with that. But wave 1 and 2 here, then 1 and 2 and 3 and 4, and then I think we've gone down for wave 5 here. A little bit scruffy in here. Yeah, it could be counted differently, I guess. But anyway, I'll just stay with this for the time being. We're looking for some sort of rally here. So that rally, just get that bit of work on that. So from green wave 2 here down to green wave 3, we're looking for the 38.2% retracement level, which is there, or the wave 4 of 1 lesser degree. So what I normally do is just take the top of that and the 38.2 and put that across there, get rid of that, and that's where we could rally to. So we weren't interested in trading this long at this point because we've got short trades in. We could also look to trade short again once this wave falls here, or I can recognize at least that we've got a corrective pattern here, and a corrective pattern would have to have overlapping wave structures. But it's not going to be an easy trade to go short from here either, because we will just come down for wave 5 and then we'll be back up to wave 4 again for this. So bit of a headache. But yeah, I mean, if you're short already, then we're just going to hang in there for that. We can bring our stop to break even, and you can always it doesn't hurt to take a little bit of money off the table at the bottom of a third wave here. We're still pretty much at the bottom of the third wave. I'll put it out here out of the way, but yeah, I should lift it up a bit. I'll just put it there. I'll just put it there for the time. It'll probably move anyway. I'll just see what we've got here. I mean, that's definitely wave 1 here with 5 waves in it. Nice little 5 waves here. Not sure about that. Yeah, I'm not sure about that. It's chucked a bit of a spanner in the works. This is corrective, so that's okay. It overlaps that a bit, so that's overlaps the top of wave 1, because I was thinking 1, 2, 3, 4 would be the right thing, and then wave 5 here, and then an ABC pattern here, and then another 5 waves up here for that, for wave 4. But wave 4s can get ugly, but we'll label it like this just for the time being. No, I won't, but I will just put our little ABC there, and I'll just give that a bit more thought. But anyway, it doesn't interest us yet. You know, we need to be up here for that, and then we can look for this wave 5 to the downside after that. I'll just check on the cash mark on another program to see if we got that spike or what it looks like. Okay, so that's that. That's a different market altogether, so we don't need to worry about that. Well, thanks for tuning in. Much appreciated. Cheers.